Good day, what's up guys? Okay, so back again with volume profile trading. So we've covered the basics of volume profile, where I've actually showed you where you can get the indicator for MetaTrader 5, and we've covered things such as the D profile, we've covered the P profile, we've covered the B profile, and we've covered the narrow profile, right? Narrow, wide, whatever you call it. So these are the type of profiles we've covered. And now the thing is, how good are these profiles? We need to know how to trade. That is the essence, or must I say, that is the best thing, which that's what we want. We want to know how to make money from the markets, right? Sometimes we'll lose, sometimes we'll win, but it is essential that you understand the basic trading strategy. So this is how it works. So there is something called, when the market is going sideways like this, some people call it a consolidation, some people call it sideways movements. It doesn't matter what you call it. I call it accumulation. Why? Because at a particular, let me change color, at a particular level, we can discover that our institutes are actually piling up on their trades. So at this level, we usually tend to see a market breakdown. It returns back to that level and continues down, right? Or it is a sideways movement, market breaks up, it comes back to that particular level and goes up again. So this is this is the setup we are looking for in our charts. We're looking for such a setup, such that we've got our market is moving, then we get this kind of action, then market breaks down. So such that, what do we do as we want to analyze this region of the market. Once we analyze that particular region, it will give us a volume profile. A volume profile which is something like this, right? It doesn't matter all the other, but we want the highest volumes in our accumulation zone, such that once that is done, we then come to get a particular price level. So this is where we are hoping to enter our market. So when price retraces back up, touches, the moment it touches this point, we trade. We enter a short position. We don't need any other confirmation. Touch, enter, you set your take profits and your stop loss and forget about it, right? So that's how we'll be doing it. You set your stop losses and your take profit and forget about it. Risk to reward 1:1. I used the yellow color there. I'm not sure if you guys can see it. So yeah, that's it. With our take profit and our stop loss, risk reward ratio 1:1, right? So let me repeat this again, such that you understand better. We start off with black, which is representing our market. So market forms a sideways movement, accumulation. This is where our institutions are building up on their positions. They want to enter, like for instance, they want to enter a trade with 1,000 lots. So due to people who use some strategies like order flow, they can actually see that a certain individual has actually entered the market at this price level with 1,000 lots, and they'll actually be seeing which direction it's in, whether it's a sell or a buy. But they don't want people to know what positions they've entered. So what do? They enter the market like with small lot sizes, like retail traders. So they enter Every time the market comes to their price, they are entering the market, entering the market, entering the market, entering the market, using several lot sizes. Like imagine if they enter a total of 1,000 positions. How many do we have here? We've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, we've got 10. So let us say that each time they enter 10 positions with 10 lot sizes. So here will be 10 lots, 10 positions, which is 100 lots, 200 lots, 300, such that when people are actually looking at it, it looks like you don't know who it is, but it looks like it's several different people who've entered the market, whereas sometimes it could just be one person, and that is our market maker. And because of this, us, when we're trading with volume profile at this particular sideways movement, the volumes will accumulate at a particular price. This particular price where volumes have accumulated, this is the price, this is our price of interest. Usually you see this by a cluster, or most of the time our point of control will fall at exactly this price, such that when price breaks down, when it returns back to that level, we enter a sell. If price went up and returns back to that level, we enter a long position. That is the basics. That is how it is done, right? Repeated sideways movement, price breaks in one direction, you take our flexible volume profile or volume profile range, put it in this region of our accumulation plus our trend, where our trend broke out into. This will then give us a volume profile where we've got a point of control which is shown by that line. Then as the price returns back, if the price doesn't touch but comes close and continues in the direction of the trend, this level has been tested. We don't trade it again. As I've stressed in previous videos, I don't trade second retest. The second retest might come and touch that point and go in our direction. I don't care. The rule says we don't trade retest, so we only trade the first touch. If it doesn't touch and returns and retraces just close, we ignore it, right? Sometimes it retests. As soon as it breaks, it retests. So you just need to watch out for those. We just need to watch out for those. So that is how I trade, and that is how it is traded. Simple, right? So simple. Let's go and look at it. Yo, what's up, guys? This is Dandazi. We will be looking at volume profile. So you just hit the subscribe button, click on the notification bell, hit all, and you will be taught, and we will go through volume trading, volume profile trading in ways that you haven't seen before, and we'll be providing you with signals every week. Take care.